Welcome to this month's newsletter. Today is January 26th. Looking at the S&P 500, massive rally from end of September. We overextended at this point. Definitely looks like it, but that doesn't mean much. Ichimoku is saying we're still bullish. We are above the cloud. We are above the Tenkan. We are just close below the Tenkan actually, but we are above the Kijun. At this point, there is a good chance of consolidation. I would not want to be short much here. We do have bearish engulfing signal. However, keep in mind that that could be just a consolidation signal, not actually a reversal in this case, given the strong trend of the market. That signal, I would act only on the signal if it closes below the Kijun, then you can have some downside to play. But at this point, the most likely target is just at the Kijun here. And then I would expect this market to consolidate for at least a couple of weeks here before breaking out. It is earnings season, so anything can happen, but given the drastic rise in the market here, I would not be surprised to see just a sideways movement for quite some time. Same scenario in the Nasdaq, bearish engulfing, really overbought markets here. I would definitely keep my stops in place, but I really would not want to be shorting much. Looking at oil, really nothing here, just cracked right through. But again, keep in mind that it wasn't a trending scenario in oil. You have alternating bearish and bullish Kumos, bearish here, bearish, bullish, bearish, bullish. And bearish again now. So this oil is in a consolidation zone, probably coming down to test these lows around 52. So if you're short, I would definitely take some profits here and think about putting some long positions at that point with stops in place. Gold, on the other hand, does look like it's ready to break out. Nice cup and handle formation. I would definitely think about buying this with a stop below the Kijun. This one has a good potential to break out, which if you think about it, might imply that people are buying gold because they think the market's going to be in trouble. That's one way to read it. UUP for the dollar, a nice rally of the lows here, but we are sitting on a flat Kijun. I wouldn't be surprised to see prices sideways, or at least until the Tenkan comes up and gives it support. The Kumo is pretty thin here, so there is a good chance they might break out in the next couple of weeks through the Kumo. So I would watch for that. People have asked about Amazon. Amazon really earnings coming up, so it could go either way. But at this point, Chicago is going to run into these congestion candles, and that's not a good place to buy or sell. So I would just wait until Amazon makes its decision after the earnings, and that should give more clarity as to buying or selling. But if the earnings weren't here on this day on January 30th, looks like, then I would say that it's going to go consolidation, and I would just sell out the position. Also, UNH, somebody asked me on this one. This one is definitely Chicago hitting in the candles here. I would not want to buy this stock until we have a Chicago breakout. However, it is in a strongly trending Kumo. Even if it pulls back or consolidates, you should be looking out for buying opportunities unless they can close below the Kumo. And there was one more. Netflix, one second. Netflix does looks like it has broken this Kumo resistance level. Kumo shadow here. However, there's pretty good shadow right there, which it failed against. Let's look at the weekly chart. The weekly chart looks like Netflix just closed above the Kumo with the Chicago also free. This one I would not mind doing a Kumo breakout strategy. Keep in mind that your stop is pretty big. So I would just buy some out of the money options, long term out of the money options for a possible Kumo breakout strategy. You definitely have resistance here around the 380, 82 level, so watch out for that. That'll be it.